It is a good morning to you guys already here. But looking at the daily chart here on the dollar index, this is some of the things I told you to watch. Obviously, we had our little run up to 100.54 level, which was that high right there. And I told you we're going to be banging around inside this a little bit. If we got below this volume imbalance on the daily dollar index, it could act as an inversion fair value gap. So just watch that today and maybe into tomorrow. If you look right to the left of it, what do we have there? See that? So there's a wick there. So this kind of takes precedence over the volume imbalances. Out of all my PD arrays, they are the ones that get used a lot. You have to be very flexible with their interpretation. It's one of those things because it's an imbalance between the bodies, even though the wicks are actually bridging the gap between the two. If you take that, move it aside here, you can see that this candlestick's low. Usually I'm forcing you to look at this little tiny text up here on the left-hand side, which is a strain on my old man eyes as myself. So this candlestick's high, 9.299, and then the low. So you can see it definitely went and touched that and went just below it a little bit. So even though the wicks are actually bridging the gap between the close of this candlestick and the open of this candlestick, it's still a volume imbalance. And those levels are pertinent to future price action. So if we're looking at the likelihood of a further retracement lower, there's sell side below this low, and look at that low there. In and of itself, that's probable because this low here is slightly higher than that one. And we have a little imbalance in here with a volume imbalance at the bottom of it. So I mentioned this last time we did a live stream. If we fail to get any kind of discount sensitivity here, something that kind of like supports the price as a foothold to send us higher, then we're probably going to either go sideways into a mess or maybe retrace down into this. If we lose this imbalance and go lower, then we're probably going to see some pressure on dollar index, and the euro dollar and pound dollar will be allowed to go higher. All right, so let's look at euro dollar real quick. All right, so it's a bit of a mess here, as I mentioned. We have confliction between ED arrays as well. Lots of wicks in here, so it's a really difficult area to read, admittedly. And the remaining sell side under here, until I'm shown incorrect in my read, intermediate term, I'm still looking for them to take that and a little bit of a piercing higher on dollar index. Now, obviously, I could be wrong because there's so many things going on. We're having talks with Iran. Iran's coming out and saying, no, we're not. You're not talking to us. And it's just back and forth. And Trump is using those stages to speak. And obviously, the times when manual intervention would step in, you can see them perpetuating that massive influx of sentiment shift. And you're seeing it around that pre-market session, 7 o'clock in the morning. So they're pushing it there. They're pushing it in after hours as well. So there's a lot of tomfoolery. The fact that we're going into a time when there's low volume in the marketplace, which is next week, this Passion Week. This Sunday is Palm Sunday, so usually the following few days, I'm not engaging price action. I'm not trading that usually, not commenting at all. So that's why you'll see me silent. But I do have a couple things that I'm going to try to produce in advance. So that way they're really short little like trainer videos. So that way you'll have something as a gift from me while I'm gone. Keep your attention focused on learning and not so much getting in here and trying to risk money because I don't think it's advised right now. Just there's a lot of things making things difficult for trading for someone that is not experienced. And does that mean I can't go out here and find something? No, it doesn't mean that at all. It means that as an educator, as a mentor, someone that has a little bit of concern about the student's well-being, I don't want to entice you. I don't want to influence you. I don't want to say anything that's going to lead to you taking on risk. I'm just kind of like revisiting these markets real quick because we're going to have a break for about 2 weeks. So there won't be any ongoing analysis or commentary by me. So that way, this is what we talked about, and then I'll come back in 2 Mondays from now, and we'll see where we're at. All right, so the euro dollar daily chart talked about this SIBI here and this SIBI here. We cleared the original small little buy side, so that's been taken care of. I'm actually going to remove that because it's already done the work there. And look how much time it's spending inside these wicks. Now, which is the lowest running stretched out wick? The largest, if you will. This one here. So if you look at this, the body so far is staying inside that. Yes, we had a little bit of coloring outside the lines, but what we're looking for is a willingness to see this gap right here. See, got a whole lot of stuff going on that chart portion right there, but it's basically all inside of this wick. So inside this wick, all of this price action in here is permissible, okay, which is what makes it difficult. But should we start to move lower, these levels with this imbalance here, that candlestick right there, that one, and then this one there, okay, those two imbalances SIBIs, sell side imbalance, buy side inefficiency, they should be used on the lower time frame. So this is a daily chart. Just make sure that these levels are on your 1 and 5 minute chart and 15-minute time frames for euro dollar. And you should see pretty significant price runs that could be used for paper trading, practice sessions, that type of thing. As I mentioned, if we get back above this here, which is, in my opinion, being utilized as an inversion fair value gap right now, I could be wrong. They could do something, over there in the Middle East, or something happening here in the U.S., because it's possibly going to happen. That could cause some kind of reverberations in price action. And should we get above this, if it were to trade above that, then I would expect this to become a reclaimed bullish fair value gap. But right now, the characteristic that it's under and using or implementing is that of inversion fair value gap. And we have to first wrestle our way out of this quagmire in price action for the euro dollar. So ultimately, what I'm saying is, in short, until I'm proven wrong in this being traded above, says I'm wrong. I'm looking for euro dollar to give up the ghost and make a run below this low and then clear up the sell side below 13917. Okay. I didn't bore you with all that commentary, but I just want to make sure I'm at least as thorough as possible, because I get a lot of questions as to why'd you say this and why'd you pick that? And did you look at this candlestick? Did you forget that one? Your PDRA didn't work here. It's a lot of personalities all around the world wanting to try to learn something and also try to teach me what I've created. It's kind of funny. So this is the currency pair that's a little bit of a struggle, okay, to get below this buy side and balance, sell side inefficiency. We spent a lot of time inside that one. And nothing in here is terribly exciting except for the fact that we have this small little buy side and balance, sell side inefficiency, which, again, much like the euro dollar, my interpretation at present utilizing it is that of an inversion fair value gap. And you can see that that's what's basically being employed here. Doesn't mean it stays intact, doesn't mean it can't be violated and traded to the upside because of some kind of geopolitical event. It's very difficult right now. Difficult. And for someone with a conscience, that's me. The idea of teaching you all in a market condition like this, admittedly, I have a little bit of trepidation because I know some of you. Let's be honest. The majority of you are very impulsive, and because you're looking for some kind of a code word, a buzzword, what ICT really meant to say is I should be buying and going long here, or something to that effect. And I want you to understand that that is in no way, shape, or form happening at all. We can be clear with one another. Um, don't take any trades right now. There you go. Practice and demo. Just practice. Read price action and be aware of how many times you're probably going to get it wrong. So it works out perfectly that we have an observation in my personal faith next week that takes me, usually my long-term students know that I don't really engage around that time anyway. But if this gets violated to the upside, much like euro dollar, then I'm probably wrong. Okay, but I'm looking for this to eventually start to wind down. It is a very formidable buy side and balance, sell side efficiency. It's exactly where a market maker sell model would fail and go the other direction if I'm wrong. So operator error is potentially here for me, but I'm wearing the analysis out there in public. So that way I want you to see if it's wrong. It's probably going to be a very beneficial thing for you to see that, because I'm being challenged right now in these market conditions. It's not easy for me to walk out here and just do it every single day, up, down, all over the place, 50 trades here, 50 trades there. It's not like that right now for me. Because of that, I'm dialing back my exposure, my frequency to trading, and really demanding the best of the best setups. And if I don't have so many things really convincing me, I'm not going to take a trade. I know enough to know that the markets are going to be here in May. The markets are going to be here in September and October and November. Okay. I'm not forcing myself to take a trade. Okay. I don't need to go out on the internet and prove that I can trade because I'm trying to run some affiliate stuff or get ad revenue or get new attention. I don't need all those things. You don't need it either. So don't get caught in that trap. So we're in this quagmire and price action moving sideways. We're up against a inversion fair value gap and a very, very prominent buy side and balance, sell side efficiency, which we've tried several times to get into. And I'm going to stick with, if things continuously get worse, I think they'll push the dollar higher. It will be ugly if it gets there, but that means it'll be ugly going lower on pound dollar. But I'm wrong. This is where I'm wrong. If this becomes a reclaimed bullish fair value gap. So in other words, it would have to trade above it, then come back down, and then not go in the lower half. And then I would expect it to start going higher. And that would be seasonal. Seasonal tendency is likely to happen. We're in that time where it could be happening. So what I'm really looking forward to is, if this can go lower, what it's doing is it's actually going lower during a time when seasonal tendencies would indicate that it's likely to go higher. So in and of itself, that would be extremely bearish and very bullish for the dollar index. Go a little bit faster here. Gold, real quick. But you know what, man, rookie sensation ICT does it again. Okay, we talked about the inversion fair value gap here. Should we trade outside on the downside? We did that. Broke lower. I told you we would see an aggressive sell off because of silver. That's what this is all about. We talked about the consequent encroachment. We hit that. I told you that we would clear up these relative equal lows. We did that convincingly. Then it took out this low, which was the other sell side liquidity. And I told you it would clean up these relative equal lows here, which it did that. So absolutely destroyed it. All you gold bugs out there that were sending me emails and commenting in my YouTube channel, this is why I don't want to hurt your feelings. Okay. I came out here, I said what I had to say, and I encouraged you to be mindful of the risk. Okay. I'm not twisting the knife against you. Okay. I'm just telling you markets that I don't generally follow, when I'm talking about them, they're usually very significant price moves that are coming. Okay. Just learn from that. Just learn from it. I'm here mainly to try to protect you from yourself, not try to make you rich. If you stay in the game long enough, maybe you'll get the skill set and the opportunity to start building wealth. But you first have to keep yourself from wrecking yourself. So absolutely stunning price delivery. We were back inside this volume imbalance there. So I'm not really convinced one way or the other of a direction here. But I will transition from here, go over to silver. All right, so here's silver. You crypto guys. Okay, you're talking about, oh yeah, Bitcoin this and Bitcoin that. This is actually $100,000+ move per contract. Doesn't look like that, does it? But every 100 handles or 100 points is $5,000 per contract. That's $105,000 inside of 2 weeks. Okay. If you're wrong on something like that, it could be a pretty bad day. It could really upset the wife. Let's put it that way. I mentioned that we would trade down to consequent encroachment. And if we got below that, we would clear up the smooth levels here and eventually went down into that little volume imbalance there. This one didn't go down to the extreme target I gave, which was potentially down here, but it did go down to the sell side there. And it acted off of the inversion fair value gap aspects. And I told you they would drop it quickly because your friendly neighborhood financial institutions had heavy short positions. And just like in 1980, like I told you, when everybody over here was saying, it's going to the moon, Alice, it's going to the moon, good old ICT stepped out there in front of everybody and said, you're all wrong. It would be uncivilized for you not to take some profits here because everybody's bullish and there's a vested interest for this thing not to go up there, and they're going to bail out the good old boys. Okay. And the good old boys just had their opportunity to get out of their heavy margin call losing positions. Well done for the free market. Let's give it up for free markets and never manipulation. I tell you what, it's good to be the good old boy club, isn't it? So that's what you're up against. This market, just like gold, is extremely manipulated. Okay. And for the folks that keep asking all the time, can you talk more about gold? Can you talk about silver? They're event driven markets. And if you want to trade in a market that's absolutely going to wreck your ass, these markets will do it because it's the good old boys behind it all. They suppress it. They're paper markets when the value of the metal themselves should be exorbitantly higher, and they're not. So that's for a neophyte, you don't grasp that. That's the reality. Okay. So that's why I don't touch these markets very often. But it's basically done what I said it was going to do. Now move to the sidelines. Don't worry about these markets. Just leave them alone. Crude oil. This guy's full of himself. Listen to him talking about hindsight moves. Look at this. I hear you. He's in my head. So crude oil, I told you we would move to the sideline as well because we already had our run. I talked about this market going up, ran up rather significantly. Now we're in that time where it's going to be untradeable because Trump can come out and say, "Well, we're winning. We killed everything over there in Iran. We destroyed everything, but yet they're shooting missiles everywhere." Make that make sense? We destroyed them. It's all a success. Kind of like when George Bush, uh, the son, came out and said, "Mission accomplished," and in 15 years we're still in there doing whatever we're doing. You can't believe the TV, folks. You can't believe the news and the propaganda that's coming out on both sides. This administration is using it, and I'll just say it that way. Okay, you fill in the blanks as to why they would use that and who might benefit from that financially. But that's really what's going on here. They got a little bit of a casino, if you will, and that's what's happening. So it's going to hurt you if you trade this. So just be mindful. Okay, it's prone to go higher because of the underpinnings of what's going on. But if you touch it, it's probably going to hurt you. So again, it's one of those things where if you think it's worth the risk, Don't be upset. Don't send me emails saying, I wish I would have listened to you. Okay. I think it's going to go higher. I think we'll see 180 per barrel, maybe even 200. None of the stuff that's going on over there right now is going to go away. That's not going to go away. All these things are part of a 2030 agenda, and we talked about these on spaces that I'm not going to talk about it here. But there's a lot of agendas where this fits that criteria perfectly, like you not owning a combustible engine vehicle, travel restrictions, 15-minute cities. All you don't see it, but this is all part of that. Okay, just be mindful. Preserve what you have. Don't risk and gamble because things are going to be getting very expensive. You haven't already noticed. How about you guys down in Oz, over there in Australia? I told you they do everything there first. Hard to find some gasoline, isn't it? Got fuel? It's going to get worse. It's going to spread just like COVID did. That's going to start spreading around. Okay, so just be mindful. That's what's coming. All right, so let's quickly run on over to ES real quick. So there's E-mini S&P. This is the mini contract. So we cleared that up, that sell side there, and we're back inside this ugly range. And I should have done it with that micro because I told everybody I would be focusing on that market this year for the sake of encouraging you all not to be trying to over leverage your accounts. So what do we have here? We have this wick. That's okay in Hawaii. Seen that? Probably ain't heard too much about all that flooding, have you? Yeah, they're getting ready to do some property development over there. You don't know that yet, but that's what's going to happen. The consequent encroachment here, as long as we stay below this on a closing basis, all of this is just using this range here. Now, watch. If we trade higher, this, if I'm wrong, and they say they want to send it higher, this could become a inversion fair value gap, and then they could come for the buy side here. Okay. My common sense is tingling. Conspiracy theorist in me kind of like keep tapping on my shoulder saying, that Trump's trying to get his buddy in May in as the new Fed chairman. And that right there is kind of like stacking the deck. So you guys can read between the lines on what I mean by that. And that might be very well the reason why we're consolidating, just waiting for that to happen. And I wouldn't be surprised. I wouldn't be surprised, once the new Fed chair gets in there, that all of a sudden things start changing and the markets start really tearing off to make it look like this is the best economy ever. The stock markets are not the barometer for how well the economy is going. It's just simply not. But because the fools that run around pretending they know something and the pundits on the TV screens that tell everybody that has the 9 to 5 job, maybe they have a 401k, maybe not. They will say, well, the economy's strong. Look at the stock market. That's not indicative of the market's health as far as an economy. How much is your grocery bill costing you? Watch how much it's getting ready to go up. And how much is your gasoline tank getting filled up? Costs me over $100 to fill my truck up. I'm not complaining, but I know if I'm feeling that and saying, wow, it's over $100, what about my students that don't have this kind of money? You're feeling it. And in areas where you can't get fuel, over in Africa, they're feeling it. People would say, oh, that's over in Africa. Who cares about them? But then now you got it going on in Australia. Whoops. I told you. In the Western world, watch Australia first because that's their petri dish. That's their test tube. What goes on there, they're going to try to shove it down everybody's throats everywhere else. Just sit back and watch. I'm probably wrong. You probably can come back here in a couple months and laugh at me and say, this guy, he thinks he knows everything. I don't think I know everything. I'm just telling you what I'm being led to say. So MNQ, this is the micro NASDAQ. So we did the business of taking out that low there handsomely now. And if I'm wrong and they don't keep it heavy, same thing here. Look at this. See that volume imbalance right there. Now watch. I'm gonna toggle this little set button over in the lower right hand corner. Keep your eye right here. See where that volume imbalance is? I'm watching that. See how it goes away? And now it's gone. Now it's back. And then we have this volume imbalance. So I want to be watching this, and I'm telling you to keep mindful of this range there. So it would need to get above that, then treat that as inversion fair value gap for me to be bullish. Until it does that, I'm not bullish. Now, conspiracy theorist angle. New Fed chair comes in. Boom. All of a sudden, we get the greatest news. The economy's so great. Everything's wonderful. Everything's going to be easier to get for you. Everything's wonderful. And then they come for these relative equal highs. If I'm wrong, that's what they're going to do. Okay. But I'm telling you right now, I'm staying with the idea because we still have a couple weeks still. And this could still go a little bit lower before this becomes a factor. But I'm wrong. This is where ICT is wrong. If it goes above this and treats it as an inversion fair value gap, then they're going to come back for these highs. Okay. That's the likelihood of what may not happen. All right. Just real quick, just for intraday, let's look at what's going on. It's not all that pretty, is it? Your sell side right below here. Take a quick look at, all right. So they took London low out here, 8:30. There really wasn't any kind of significant news. So see how if they take it below here, see if it accelerates to the downside. There's sell side below there, and look at those lows there.